Good morning from Los Angeles. Welcome to Trading with Sergio. How is it going? How was everybody's weekend? We had a wonderful weekend in LA, wonderful weather, and I think this week is going to continue. So I guess spring is around the corner. And talking about spring, market is springing forward today. I'll talk about it, obviously, to see if anything has changed. As the title of today's Trading with Sergio indicates, is this the bottom? Has the market bottomed? I'll talk about it when I'm going through my watch list and charts. I'm going to also put the link up there for anyone that wants to show up, show their face, and talk to me in person. Give me a second. Here's the link. Don't be shy today. There isn't much to talk about other than the market bouncing, obviously. But then we have April 2nd coming up, where here's the link. April 2nd is the D-Day, supposedly, or what do you call that? The administration is calling it Freedom Day. Today there was some more news about tariffs. Now they're saying that whoever's buying oil and gas from Venezuela is going to be facing 25% tariffs. So I guess the sanctions are not enough. But again, I think the market's getting comfortable with those headlines. It was really sketchy for about a month or so. Every time President Trump said something about tariffs, market would take a dive. And then we know what happened after that. We had a pretty nasty sell-off, actually, about 10%, although we have bounced about 3%. 10% on SPY, close to 14% on Triple Q. A lot of stocks got shot, taken out back and shot. Well, I'll go through my positions. My positions are pretty clear. I do post all my positions, open positions, every Monday, Wednesday, Friday on the community page. Again, this is not financial or trading advice. If you do tag along, I may get in and out in a day. By the time I post the next positions, I may not have that. So if you tag along, do it at your own risk. Do your due diligence. This is not trading and financial advice. Well, if you guys see the Friday's position, look at the Friday's position, the community page. I'm pretty much flat. I'm actually, as of this morning, I'm 98% cash. Cash is a position. I did a video about that. Don't fool yourselves, especially in markets like this. Cash definitely is a position. What you need to do in this type of market is size correctly, for sure, manage risk correctly. Although things are bouncing, I think this bounce should be taken advantage of to liquidate or clear up or raise some cash with undesirable positions or the positions that you may have been stuck in. Long story short, I don't think the market has bottomed yet. I think a retest is going to happen. And if it is the bottom, market will show itself. So no rush into shorting anything at the moment, although I will lean into some shorts probably this week. And not because of April 2nd. Everybody knows what's going to happen on April 2nd. I have a couple of theses, obviously, that I developed over the last month and a half with what the Treasury Secretary is saying, what the administration is saying regarding deficits and all that stuff. I've talked about it endlessly, so no need to keep repeating that. Most of you who do follow me understand where I stand. I created a thesis on a TLT trade, which I actually may put on the position while we're talking because I think it's proper to do. TLT is the inverse indicator of 20-year notes or 20-year bonds. Although that's the long end, I think most of the action is on the 10 years. 10-year note, by the way, is where the banks adjust the rates on, let's say, mortgages, car loans, things like that. Home sales are in the tank. Talking about economic indicators. Here are the economic indicators for this week. Let's see what we got. Okay, so today we had PMI data on Monday, which was today, which was okay. Nothing, the PMI stands for Purchasing Managers Index. It was okay. Tomorrow is a big one. Consumer confidence data for 2 months in a row. It's been in the toilet. Let's see if it did pick up. If it did pick up, I think most people are spending, living on credit cards these days to combat inflation. On Tuesday, again tomorrow, February new home sales. Look, new home sales, existing home sales are in the tank because the mortgage rates have not come down. Why is that? Because the Fed is trying to lower rates, but then the market's raising the rates. In fact, today when the market rallied, rates are going higher today on the 20-year and 10 and 20-year. But I have a thesis on that I think the trade I'm going to put on is long-term, actually, probably going out to next March. Got to be patient with that because TLT is not as volatile as, let's say, Palantir or NVIDIA. Very important data coming out because they have been downgrading the GDP growth as the Fed did last Wednesday after the meeting. They cut the GDP growth from 2.1 to 1.7 for 2025. The market's sniffing a slowdown, definitely not pricing. It did price in a slowdown. It's not pricing in a recession. I think that's too premature to talk about, but the market will price it 6-8 months ahead. That's why the trade I'm going to do on TLT, which is interest rates, is proper, right? I mean, I don't see too much of a downside on that trade, really. From this point going forward. So Atlanta Fed GDP data is coming out. Atlanta Fed actually was the Fed that started the sell-off, as far as I'm concerned. Last month or a couple of weeks ago, they took their GDP growth. So there is Federal Reserves all around the country, Federal Reserve branches, New York, obviously, Cleveland and Atlanta, and covers basically all the geographical areas in the country. And New York Fed, so San Francisco Fed. But the point I'm trying to make is, Atlanta Fed was the one that started all this ball rolling as far as the economy slowing down. And they downgraded the GDP growth estimates from 2.1 plus 2.1 to minus 1.6. So that's a huge drop. So let's see what changes. I think that's going to be really, really important. And then more importantly, on Thursday, you have Q4 US GDP data. Let's see if the economy is really slowing down. So it's going to be a volatile week, although VIX is pulling back down to 16, 17 level, down again today. As you guys know, VIX is an contrary indicator to what's happening to the markets. When the market goes up, VIX goes down. When the market goes down, VIX goes up. There was one thing that happened on the VIX. Actually, I watched the video on another channel, Tasty Live. You guys, should be, paying attention to that. Tasty Live is Tom Sosnoff, who created Thinkorswim, sold the company, and they've sold companies after building these wonderful platforms to big companies. I like the way they look at things, and they have a data analysis group, and they analyze data on VIX relationship to the indexes. So over the last in the history of VIX and indexes, this was the first time that the market had a 10 to 14% sell-off without the VIX breaking 30 to the upside. So I'll put up the VIX chart when I talk about that issue as well. So if I forget, please remind me. It is an interesting thing that's happening. Why did not VIX go up into the 40s and 50s when the market was selling off? And it was selling off pretty hard, as you guys know. So what is changing? What are the reasons for that? I'll talk quite quickly about that when the segment shows up. And on Friday, we have February PCE inflation data. Fed looks at the PCE inflation data more than the CPI. I think that's the data that they look at. So what is happening is that Fed, is saying we're data dependent. So PCE, by the way, stands for personal consumption expenditures. Let's see what that has something to do with the consumer as well. And so the Fed is saying they're data dependent. The government, the administration, current administrations wants lower interest rates. So my thesis is that they're going to slow the consumer spending down intentionally to lower interest rates, because when the economy slows down, the gas pedal and the brake pedal for the economy to move forward or backward or slow down inflation and things like that. It depends on consumer spending in this country, because 80% of our GDP is consumer spending. So if you slow down consumer spending, you may slow down inflation. Hence, you may force the Fed to cut rates. As we know, Jay Powell is the only person that President Trump cannot fire until his term is up, and his term is not up for a while. So he's not listening. So there is a little bit of a standoff going on between the administration and the Fed. But again, Fed's hands are tied because of the debt and deficits. And, Fed is following a broken, fiscal policy from Washington. I mean, their hands are tied. I have a very interesting video coming out today about, so check it out at noon Pacific. It's about who needs lower interest rates the most. Well, we have $9 trillion in notes, bonds coming due and maturing. Well, those have to get replaced with IOUs because we're running a deficit anyway. And the interest rates on those new bonds that we're going to issue are going to replace the ones when we had ZIRP, right? Zero interest rate policy. So our interest costs are going through the roof. Last year, this year is supposed to be $1.3 trillion in interest costs, which is almost double our defense spending. So if Doge is going to do anything, cut waste and fraud and all that stuff, I don't think it's going to amount to much. What needs to happen is that national debt that's going up by $1 trillion every 100 days has to slow down, right? So with the cuts, and the Fed wants lower, the U.S. government wants lower interest rates, and the administration understands that, but then you can't jawbone about it. You have to do stuff about it because the market's seeing right through. So the Fed goes with data dependent. But Fed is always data dependent. They're always behind the 8 ball or behind the curve, as they call it. So, there's a standoff going on. Fed goes, no, we're not going to cut rates prematurely, because if they do cut rates prematurely, which I thought they did, inflation will come back, and then to kill inflation, then you have to raise rates, and we're looking at a disaster. So lower interest rates has to happen naturally. Lower interest rates has to happen by the market deciding that lower interest rates are proper. And the only way that's going to happen is to slow down in the economy, slow down in consumer spending when inflation gets to the target range. But then what's happened last Wednesday is that Fed raised their target rates from 2.5 to 2.7 because their mandate is 2% inflation with full employment. Well, unemployment is ticking up too now. So all the data that the Fed is looking at is not calling for interest rate cuts, but the administration is, hell-bent on lower interest rates. Well, if they want lower interest rates, they better get that debt deficit under control. 1, 2, the only way that's going to happen is inflation coming down, and the only way to bring down inflation is slow down the economy. So if you slow down the economy, consumer spending will go down. But I think this is the right time to do it because consumer credit is at its limit, really. It's just making all-time highs. Most people are paying for their stuff by credit cards, and credit card defaults are going up. Subprime auto loans defaults are going up. So there is a lot of moving parts, but hopefully I'll read the correct tea leaves and then connect that to the trading. Going forward, I'm going to trade less. I'm going to size small until there is an indicator. And now when I say trade less, both sides, right? Short and long. I'm going to be a lot more balanced going forward because even in a market like we had, down 14% on NASDAQ and 10% on SPY, there are stocks that are making 52-week highs. So I would urge all of you, on your platforms, whatever platform you're using, to create some scans, which is easy to do. I did it on Robinhood. I did it on Thinkorswim. Just follow the 52-week high list because that's where the outperformers are going to be. Yes, stocks will bounce after a sell-off, like, Robinhood bounced from 35 to now it's 46 or 48, whatever it is. Same thing with Palantirs and all these, high beta stocks. Same thing with NVIDIA. Those are, I call it dead cat bounces. If you caught the low, great. If you didn't, okay, fine. But those are not outperformers. Outperformers for me would be a stock that is making 52-week highs or is not going down as much as the market is going down. If you look at a Robinhood, when the market went down 14%, right? Stock was 67. It went down to 34. It was almost down 40%, 50%. Same thing with Palantir, let's say, 125 to 75, down $50, 40%. Well, the reason for that is they have higher beta than the market. Understandable why they go down as much. And the point is that during that time, during that big sell-off that we had last few weeks, there were stocks that were making new highs. So the way you look at it is, if you have a watch list and you create a watch list, for example, if you have a stock that's unchanged or green a little bit, when the market is down 3%, the index is down 3%, that's your winner right there, right? So it's not going down as much as the market is going down, but when the market turns, those are going to fly. So, you know, that's going to be my focus area going forward until things settle down a little bit more, so you can get back to the usual suspects, the Max 7s and things like that. You know, that's what I'm going to do. I mean, you know, have a conviction, have a thesis, and trade around it. Otherwise, yeah, I mean, you know, I still think we're in a multi-leg down move. We're just bouncing back into resistance now on low volume. Will I short the market today? Probably not, but I will definitely take a stab at it, probably a little bit higher than where we are now. You know, technically, market just broke pretty much through everything, and we're getting the bounce, which is normal because we were extremely oversold. And now we'll see. Are we going to roll over, retest? Are we going to roll over, make a lower low? So I don't know. I mean, I'm just going to trade what's in front of me. I'm not going to pay too much attention to the news, because I think pretty much everything is priced in except the recession. Slowdown is definitely priced in now. Recession, I don't think it is. So, good morning, good morning. Good morning, Mojo, Traveler, Vic. Okay, I put the link up, Vic. If you grab it, come on down. Ernesto, what's up? You've been missing in our chat group. Not you, but a few other people. Galvis Aurelius. Happy Monday, Galvis. What's happening? What do we do? So I put the link up. If any of you want to show up, please do grab the link, and then I'll see you in the green room, and then I'll put you on. So let's go through some charts. Oh, what did I forget? Oh, okay, channel is doing fine. About to hit 2,000 subs. It's okay. It's growing on its own weight, really. But again, I'm not doing this because of YouTube. You know, I think my information is pretty solid. If you do enjoy the content, please put a thumbs up. Please share it. If you don't, it's okay. The other thing is, we have a very decent members group now. We call it Know Your Worth members group. I think we're about 31, 32 people in there. And so if you do become a member, support the channel that way. You get a few perks. One, you get my live trades. Obviously, when I do trade, I'll put it, because I created a Telegram chat group. It's only for the members. And although I do post my trades on the community page for regular subscribers, for the members, they get access to my live trades. Exactly what I'm doing. I put the trade on, and then I'll put it on the chat group. So we have a chat group going on. You have free access to that. You have free access to weekly live streams, which I may cut down actually at this point, because I think everybody has learned what they're going to learn. But you know, haven't made a decision on that. But that's every Wednesday, so you get a free live stream, 4 live streams a month. And last but not least, you get this wonderful t-shirt for free, which is a $30 item, because we wear this t-shirt because our group is called #KnowYourWorth group. And, you know, so we're like a little team of traders over there. We have newbies, we have intermediates, we have advanced, you have me. We have a couple of really, really advanced traders as well, which I respect their opinions. We have have the crypto guru. So we talk about everything over there, you know. But those are the perks. So if you do choose to become a member, thank you for the support. Good morning, everybody. So where are we going today? Let's do, so I went through the economic data. Let's go through some charts. If any of you want to come on, the link is right here. Put the StreamYard link up. Oh, yeah, okay, let's go through the charts. Let's go through the position start with. Hopefully you guys can see this. I'm pretty sure you can, because I think I've gotten pretty efficient at this at the moment. Let's take a look. Let's take a look at the positions. Okay, so I have 2 lotto tickets. One actually I'm cleaning up. The other one goes to April 17th. I have 150 calls of Cooler, KULR, 160. I have the 2.5. They're nickel dime. I'll either, take whatever money. As I said, I'm 98% cash. If you guys look at Fridays versus today's, it's pretty much cleaned up. It's gotten a haircut. Why did I get cleaned up? Well, as most of you know, if you do go check the community page, I had sold cash secure puts or naked puts, let's say, because it's not cash secure puts. I have a margin account. I don't use margin, but I do it on margin because the requirements are less. Buying power gets affected less if you do it in margin. Doesn't mean you need to go on margin. So I had naked puts on TQQQ, AFRM, UPST, Hood, and in my investment account, I have, so as you know, two accounts: long-term investing and trading. Trading account is 6 figures. Investing account is 6 figures, but much larger 6 figures. It has done well last couple of years. There's only one position in the investment account. It's about 80% cash. I put 20% of it in there. It's Unity Software. I'm about even on the stock. Although I had sold cash secured puts sold puts on Kava, March 80s, they expire worthless. Okay, so I'm going to do them again, but stock is 88 now. So I'm also reconsidering doing, selling puts on things I want to own. I mean, if things get down to where I want to own them, I'm just going to buy the shares now. Kava rallied from 76 to 88, and I only took in $3.50. They expire worthless on Friday. All the rest also expire worthless, or I close them at a nickels and dimes a couple days earlier. So it was good. I took in a bunch of premium. And if I were to get assigned, I was willing to own those shares at those levels. So, but they're all higher. And if I look at the comparison of buying the shares, not options, just equity, buying a few hundred shares, I would have made more money. And because those puts that I sold with the volatility that we had, although implied volatility is up, those puts went in and out of the money every single day, right? I had the 35 puts on Hood. I had the 40 puts on Hood. I had the 50 puts on Affirm. I had the 50 puts on Upstart. I had the 60 puts on TQQQ, which is the 3x ETF of QQQ. I had 2x ETF, sorry. I had the Kava 80s. Every day I was either going to get assigned or they were expiring worthless every single day, back and forth. It didn't make sense, really. Although I sold them short term, I sold them like 10 days out, weeklies. Still, with the volatility, in money, out of the money, in the money, they all ended up either expiring worthless. I bought them back with 95% profits. But then the amount of money I made and the amount of money buying power wise it held, it didn't make sense, right? Because, I mean, if you sell a put for a couple of bucks and it goes to 6 and then you wait and it recovers and then goes to 0 after 10 days, is not my cup of tea. I do this once in a while, especially in the investing account where I want to buy stocks cheaper. But, Kava's down to 74. It's already 88. I buy the position as opposed to just sell the puts. So I don't know. Going forward with this, well, now that the volatility is getting crushed, VIX is coming down. I don't know if I'll do either cash secure puts or sell puts. Step up and buy the damn stock. Period. If you have conviction in it, if you like it at that price, why not? Size correctly and buy the stock. I mean, you can trade options too, but then now I think it's better to do directionals because implied volatility has come down. So I have 2 positions. I have nothing. I have 25. I had 70. I have 25 of the TQQQ calls left. I'll get rid of them. Literally, I'm 99% cash. Let's look at some charts. If you have questions, please put them in the chat. This is the SPY. Give me 1 minute. All right, so here's the SPY. Okay, we had we broke down from the channel that existed for a year and a half. Look, technicals are technicals. Whatever people say, oh, technicals work, technicals don't work, it doesn't matter. Technical shows what happened in the past. The only reason technicals are, I think, reasonably successful is because patterns repeat, because millions of other people are watching the same damn thing and they're doing the same thing at the same price. So if you pay attention to technicals, it doesn't tell you the future, but it tells you the past. And if you do believe the past is an indicator of the future, then yeah, okay, go with it. But I watch a million different things, so don't make the decisions on technicals alone. But I mean, they work. So today we had broken under the 200 EMA. We broken the channel. We got into a little bit of support, really nowhere, in the middle of nowhere, actually. And today we're bouncing. The bounce was expected. If you do watch Power Hour on Trading with Sergio last couple of weeks, you would have heard me talk about it. Today we gapped up because Trump said, oh, tariffs may be, this and that. I'm like, look, man, whatever's going to happen is going to happen. You can't just get pushed and pulled with every bit of news when President Trump is talking. So what you need to do is just look at the overall picture, look at the bigger picture a little bit, because when times like this, I look at like a little bit longer term charts. This is the 3-year chart on SPY, right? This is the long-term uptrend, intermediate term uptrend, the short-term channel we've been in that we broke down from. My money says we're going to bounce up to the 50 EMA, which is, I don't know, let's take a look where that's at. We're going to bounce into resistance, start selling off again. And so bouncing into resistance, the first resistance is here actually, about 575. Next resistance about 579, 580, and 50 EMA is 583. Okay. If we do go all the way up to the channel, usually we snap back to the channel, but I think we broke the channel, went too far to snap back that far. I think I will give it a shot on the short side to some selected equities or maybe index puts. Maybe buy some put spreads when we get up to about 582 range. That'll be my first crack at it. So we're about 1.5% from there. Same thing on triple Q. There you go. Is this the bottom? I mean, we did some work here, so I'm not going to deny that this may be the bottom. Is it the ultimate bottom? No, I don't think it's the ultimate bottom. But we have solid resistance at 500 on triple Qs, which kind of coincides about 502.5 with the 50 EMA. We're trying to go above. So this is more like the snapback that I'm talking about. So this was if we look at the long-term 3-year chart, daily chart, not the 1-hour surge, 3-year. Okay. So same thing. We had a channel going. We broke under the channel. This looks like a bear flag continuation pattern to me. Again, technicals are technicals. I will definitely give it a shot. A short side 498 to 501, and we're at 481. So another 1.5%, 2% from here. On the short end, at hourly charts, the first resistance is going to be about 495. Give it a shot there. 10-minute, 10-day. That wasn't this period that on 10-minute, 10-day, we just kept going. And we were under it for 14 days in a row. So if you did 0 DTs at the start of every day, you would have made some really good money. So we did, create a base on the 10-minute, and we're breaking out today. 10-minute, 10 days, probably for your weekly option traders. I don't day trade, but I'm looking at the daily. I see resistance coming up all over the place, and I will lighten up on this because all the moving averages have rolled over. That's what creates a trend, and it pretty much looks like this big old sell-off that we had during the Japanese yen carry trade crisis. And then what we did bounce, rolled over, and then that's where I think I'm going to decide if the market has bottomed for good. So we need to have some sort of retest. It doesn't have to retest the exact low. Maybe create some sort of bullish divergence. Like, in fact, the MACD is turning up today. It's way under 0, but it's turning up today. It's crossing. The signal is there. What I would like to see is that MACD get up to close to 0, which will be resistance, roll over, market make a lower low, but MACD doesn't make a lower low because it did exactly that on the way down. It threw in a whole bunch of bearish divergences on the daily. Every new high we were making, MACD was lower. So to me, that's where I'm seeing things working out, but I will definitely give it a shot on the short side. So what would I short? I'll probably short Hood and Palantir and probably Nvidia, and I will, short the shares and sell the puts, weekly puts, although they may not be as much money. That's one way to do things. So a lot of people do covered calls. This is covered put, basically. That's what it's called. Why is it covered put? Because I'm short the actual shares. And so that's the strategy I'm going to deploy. Sell weekly puts if I do short the stocks. If it goes higher, that's my protection. It won't give me dollar for dollar protection, and then if it does roll over and play dead, then within 5 days by Friday, I will get assigned the shares, and that's how you close the short position. So, you can do this both ways. You can buy the stock, sell the calls, cover call. You can short the stock, sell the puts. That's called cover put. Most people don't understand it, but then I'm comfortable doing it. Let's look at some charts. AMD is finally, I think there is light at the end of the tunnel, and it's not the train coming at you. Not AMD surge. Oh, Lord. My dyslexia is back. So AMD finally breaking above its 50-day. Still way under its 200 EMA, but there's this channel that we're breaking out of. MACD turned up, still under zero. MACD has been under zero, literally, since October, man. I mean, when the stock was about 150, we probably bought them about 95. Now we'll probably go sideways. But now I don't mind buying AMD on pullbacks, although it's under 200 EMA, which I don't like touching stocks under 200 EMA. But I think now we will, at least instead of making lower lows, lower highs like we did for 4 months, now I think we may be in a decent trading range. So AMD, back on the watch list. Here's something. You can see this is how volatile we are. Okay, so this is called App11. That thing was 525, came down to 242, literally touched, whatever you want to call it, the 200 EMA at 238, and now we're at 336. 100-point rally, right? It's a volatile stock as it is. Where do I short this? It's going above its 50 EMA. I'll probably short it right about here, about 360. A retest is in order. But when they do sell off, they sell off, man. I mean, 525. And look at this. I mean, it gapped up on earnings. Earnings were good. Catalyst was there. Gapped up 525 to 235. That's a $290 sell-off, people. In literally 15 trading days or less, right? So when it's volatile, trade these things, right? I'm definitely going to give that a short shot. ASTS is one of my favorites. So this is what I'm talking about under outperformance, right? So when the market was selling off 14%, yes, this did sell off from 35 to 25. But what is happening today? When the bounce, right back up to 28, right? So my point is, find stocks that are not going down when the market's selling off. When the market turns, it's going to fly, right? So ASTS is one of those. Another one, Chinese names, obviously, I still like. The thesis has not changed. In fact, I'm going to, Baba is just high-level consolidation now, Alibaba. Although MACD has turned down, I get it, no problem. Low volume, look at the volume, right? Huge commitment here, no volume here. Institutions are not going to get rid of these things that fast. Another one that I really like is BE, Bloom Energy. So this is a tertiary or secondary play on the AI game. All these data centers that are being built, they're energy suckers, and Bloom Energy, outside nuclear, the closest thing to reality is natural gas and hydrogen. And this is what, look at Bloom Energy, right? Does that look like that stock sold off? Right? Just going sideways for the last, like 4 months now, before it takes the next leg up. So I like Bloom Energy. I will definitely buy the shares when it breaks out. So a couple of more Chinese names, Bilibili. Actually, I'm going to buy shares either today or this week for sure. I think it's in, we did trade it. I'm definitely interested in getting back in. Baidu, same thing. Crypto is moving today pretty well. So here's the Kava deal, right? Look at Kava. Okay, I bought the stock at 35 after I ate there a year and a half ago. In a year and 5 months later, I sold it over 5x, right? That was an amazing trade in my investment account. alongside with Palantir, which was, I sold it with a doubled and then it quadrupled after that. But this one was a 5xer for me alongside Carvana. That was another 5.5x. But you can't cash those all the time. But what I'm trying to say is that I had sold puts in my investment account, 80 puts that expired Friday. Well, stock low is when I had the puts, which I thought I was definitely going to get a sign. Stock low was 74. Well, today we're at 88. Right? Okay. Well, I took in 3.5 when I sold the puts. So I was willing to buy shares at 76.5. Well, what happened? Stock rallies 14 points. I only made it 3.5. Okay, I wouldn't be able to buy the low, sell the high. I'm not talking about that. What I'm talking about is sometimes selling puts is not the best thing to do. Just buy the damn thing. One of our members is swimming in CELH. This is another one, right? So stock went from 100 to literally 20, right, in its own bear market for a year. And then they bought another company, earnings came out, gapped up, gave you a chance at 24, back to 35. If I had it, I'd probably sell it, take profits on it. Carvana, bouncing up, right? A lot of these stocks are bouncing, obviously. So you just got to be nimble. I mean, do I trust this? Are they all going to go make new highs? We're going to have to find out. We'll do it together. FRPT is, somebody brought that to my attention. Look at this thing, right? 164 down to 75. How do you survive that? Now we're going in the sideways. Now I'll take a look at it. I mean, way under 20, way under 50, way under 200, but just at least just take a look at it. Just watch it. All the financials are rallying today. Another one that got shot to pieces, Hims and Hers. Now it needs to base for me, yeah, today is kind of going up, but a lot of people are expecting these things to just go right back to the old highs. This was 73, came down to 32. How do you handle that? I mean, I can't. You guys are better than me if you can. Saying, oh, it's fine, long term, I'm going to be fine. I'm like, you just lost 60% of your value. This is IBIT, which is Bitcoin. Bitcoin is 88.5. Still in a trading range as far as I'm concerned. Probably high trading range between 780 to 100, let's say. But you guys know about my ATM machine on MicroStrategy and 2x ETF, MSTR, MSTU. This is MSTR. There we go. Broke out of the wedge. 200 support, double tested. MNAV is going back up now. It was over about 1.7. You got to watch that MNAV when it gets to 2. You got to be really careful with that. And this is MSTU, right? As you guys thinking about the labels, I've been in and out of this thing, I don't know how many times. I don't have a position on these yet, but I'm definitely interested. What else? NVIDIA, of course. So NVIDIA, bottom about 105, 122, right under its 50 MA. If I'm going to short this, I'm going to short it probably about 120. Right at the 50 MA, probably about 124, 125. When I say shorted, I'm trading these things. I'm not shorting and staying short forever. Let's see. Here's another one that we were short actually in the group. 59 down to 22. Yeah, OKLO, which is nuclear energy for AI data centers. They don't even have a product. They pumped it to 59. And then what? Right? I mean, yeah. Actually, I did mention this in the group, but I didn't buy it. Here's Palantir. This is going to be my other short. If I do short the market, here's Palantir, right? Came down 125 to, I was short. The group was short. We made really good money on this. Where would I go short? 50% correction, 125.75 is 50 points. It literally was 50 point sell off within like 12 trading days. 50% correction puts it at 100, right about 98 to 100. I'll start shorting this. I don't think it's going anywhere. I think it's going to base here or trading range 75 to 105 probably. I mean, I'm convinced these things are going to roll over shortly. So just create the thesis and go with it. We looked at triple Qs. Here's another one that got shot and then it's bouncing. All these bounces are anemic, right? Reddit, 230 down to 105. Imagine that. Imagine you just sold puts like 230, stock gets to 170. Okay, down 25%. You go, oh, let's sell some puts, and then you're looking at it 40% lower after that. You know, this is one stock that I absolutely loved when it was 100. Look at this thing. See, this is what I'm talking about, right? It's called Root Insurance. They do some AI work with insurance. As we know, all our insurance rates are through the roof. Here's a stock, right? If you look at this, and if you look at the triple Q, right? Does it look similar? No. Is this outperforming? Yeah. So when the market was selling off, this thing, in fact, didn't even not only going down, it was making 52-week high after 52-week high. We're at 180, up another 16 today. This is what I'm trying to teach you guys here. Find stocks that are outperforming. Everything else is underperforming. So to find stocks like this, it's easy to find. Set up your scanners and then check them out. You know, watch those things. Let's see, Shopify. You know, it's actually bouncing harder than most of the other ones. But again, still, you know, it came down, kissed it to 200 EMA. Okay, cool. SoFi. There's SoFi walking right up to the 50 EMA. I mean, look at this thing, right? It goes from 17 down to 10.5 in 15 days, 15 trading days. What is that? 60%? You know, if you bought it at 10.5, 11, you're up 25%. Great. Now, selling puts on this, yeah, you'll make you collect some premium. But now what, right? 50 EMA coming up, right about 14. I don't know if I'll short this thing. I don't think there's enough juice in there. I'd rather short some more volatile stocks. There's a couple of little names that our group is looking at. Here's SPCB. SPCB is Supercom Limited. They're a cybersecurity stock from Israel. They're getting a lot of U.S. contracts, actually. MACD's turning up. I am quite interested in this. At this level, in fact, you know, low was 6. This thing was 18, 19 high. Kind of consolidating. Find really good support at 200 EMA. SPCB would be something I'm really interested in. Tempest AI, another wild, crazy AI stock. There you go. 91 down to 41. Now we're up to 57, 58 already, right? Okay. So when the sell-off happens, there are things to do, man. You know, we don't need to, but we need to be patient. And here's everybody's question, Tesla. Here's Tesla, right? MACD turned up finally. Has broken down everything. It's going above its 200 EMA. Resistance definitely about 300. There's some more room for it to bounce, but I'll be a seller of Tesla about 300 to 305 without a question. I don't think troubles are over yet, but everybody expects on Tesla for it to make a V bottom and go make new all-time highs. I don't think that's going to happen for a while, and we all know the reasons for why that is. And here's the TSLL. Actually, I was in this. This is the 2X ETF of Tesla. Big rally, 6 to 11. Again, I'll be a seller of this, right? If Tesla about 300 to 305, I'll be a seller of this, or short. I'll short this thing. You know, here's the trade that I'm looking to do. TLT. Here's TLT. We're right on the little short-term uptrend. MACD is kind of rolling over. Put in a bearish divergence. I'm really watching this closely. I will start putting the position on. In fact, I'll just go through the option chain and take a look at it real quick. So this is the position I want to do. So the thesis is, if we're slowing down, this is going to go to 110. 110 is 3.5%. They're about 4.5% now. This is the 20-year bond, 20-year note bond, whatever you want to call it. Bond, yeah. 10 years is note. Anything shorter than 10 years is notes. Anything longer than that is bonds. So this is kind of the longish end. So the administration wants lower interest rates. To accomplish that, you need to slow down the economy. If the economy doesn't slow down, TLT is going to go down. Okay, fine. So now I go look at TLT. What has TLT done over the last 10 years? This is interest rates in the US over the last 10 years. In fact, I'm going to go look at the maximum going back to 2002. This is 2002, people, back here. So as you guys can see, TLT went from, during ZERP and pandemic, 180, okay? That's when rates were almost negative, to 180 to 85. 80, the low was about 83, okay? 83 coincided with what the low was, meaning the high in interest rates, right? In 2002. So we're going back 22, 23 years. So 83 is the worst that I see happening. I don't see it going down there because I think economy is slowing down intentionally or not. Bonds are going to go up. TLT is going to get up to probably 110, 115. Okay. So the administration wants the rates at 3%. Fed wants it too, but then Fed needs indicators for it to go. So the downside is limited to about 85 probably, as far as I'm concerned. So I don't think we're going to go above 5% on this 20-year bond. Okay. That's one. So then go back to the short term, take a look at the TLT now. Okay, so I'll start putting on a position such as this. This is going to be a long-term trade. This thing doesn't move as volatile as the stocks do, but although if you guys look at it here, you know, it did move, well, it did move from April to September, which is 5.5, 6 months. It moved from 87 to 101. That's a lot. Look at it as a stock. Okay, so this is the inverse indicator, by the way. So when rates go up, this goes down. When rates go down, this goes up. So then from 101 to 84, that's 17 points. That's another 6 months or so. And now we're kind of in an uptrend, but it kind of looks like we're rolling over. We got stuck at the 200 EMA. Okay, so my thesis is I don't think we're going to get worse than 85, which is right about here, which is the low. Okay. So the way I look at it is, this is the way I'm going to structure this trade. I'm going to go March, 1 year out to the leaps, 2026, March 2026. So here's my option chain. So we're at 90, let's say. We're exactly 89, 86. So we're at 90. So what do? Well, I know I can take a shot at the 85s. Okay, so 85 puts are $3. Okay, so what I'm going to do is I'm going to go sell 85 puts, because I don't think we're going to go below 85, because two reasons. If the economy is booming, inflation coming back, yes, we are going to go below 85. But then I'll have hedges on the long side of the stock market, right? So then you can comfortably go long things. That means we're making all-time highs. If this is at 85, that means inflation is back, Fed is about to raise rates, and economy is doing excellent. I'm thinking the other side. What I'm saying is that everybody wants lower rates, including the US government. And if the economy slows down or we go into a recession, this thing is going to fly, because that's what happens, right? Then the Fed is going to start printing and cut rates. So I want to sell the March 2026 85 puts, then turn around with that money, come and buy March 2026 95 calls. So now I'm at a 70-cent debit. I don't want to put any money out of pocket. I see this getting up to about 115, 110, 115, let's say, right? So at the moment, if I sold the puts, bought the calls, I'm at a debit. Well, I don't want to be at a debit, because so we're right in between. So we're at 90, 95 calls are more expensive than the 85 puts. So what does that mean? So market's expecting the premium is skewed to the upside, right? Because they should be, actually the puts are closer to the strike price than the calls are, but the calls are about 10%, 20% more expensive. Okay, now, no panic. Then I'm going to go Because my upside would be, let's say, 110, which I think it's going to get there. So then for each one that I do, it's a three-legged transaction, all simultaneously done. Then I want to go sell a 110 call against the 95 calls. So now, by doing this transaction, I'm taking in close to 50-cent credit. So what's going to happen to this? Three ways, okay? I think rates are going to go lower. I think 1 year is enough time. If we're going to slow down or a recession, all TLT is going to fly. If we don't, I don't think the risk is lower than 85 on the downside. But I have a 45 to 50-cent credit that I'm doing it with. And I'm willing to buy TLT at 85 minus the credit that I'm taking, which is, let's say, 50 cents, 84 and a half. But I don't think it's going to get to that level. So you're going to say, well, aren't you capping up your upside? Yes, I am, but I am not putting any money in. In fact, I'm getting paid to play for 1 year without money out of pocket, more than without money. I'm getting paid to play with a 40, 50, 60, 80-cent credit, right? Okay, now it jumped to like 140. So that means the bid and ask is moving pretty wide. But I think 50 cent and higher credit is this trade. That's what I'm willing to do. And if rates go lower, okay, if not, okay, so three choices. It's below 85 in March. I own TLT at 84 and a half if I do it at 50 cents. TLT is here, exactly here at 90. What happens? Calls expire worthless by March, puts expire worthless, but I took in 50 cents. Okay, I took in 50 cents. And to do this, by the way, what kind of money do I need to do this? For each contract, so my auto is set up at 5. So for each contract, I am required to put up about $1,000. Okay, so I'm tying up $1,000 in buying power to take in 50 cents. But this is more of a bullish trade than anything else, right? But I'm not putting any money out of pocket to play. So if TLT is 90, both sides expire worthless. If TLT is 95, again, both sides will expire worthless, okay? Now, you can do this with at-the-money options, which I will take a look at in a minute, price trade that way. But I think TLT will be 110, one range, somewhere in that range. And that's why I'm selling the 110s to create a credit. And if it's at 110, the 95 calls that I'm buying are going to be $15. I didn't put anything in. If it's at 100, they're going to be $5. So the credit on the put side is going to turn into $5. So that's 10x. If we're at 110, that's 15. That's 15x plus more. So, but most of the time when I do look at these things, I look at right at the money for both puts and calls, right? So the 90 puts for March are selling at 515. So if I sold that and came around and bought at the money 90 calls, maybe I'll do that because the credit I think is going to be higher than that. So I'm selling the 90 puts at 515. I'm buying the 90 calls for March 2026 at, yeah, that's why it's moving up. It's like 560 at the moment. And then go sell the 110 calls again against it. Now I'm at almost $1 credit. And what does it cost for me to do that? Now it costs $9,000 buying power effect. The other one was 5,000 buying power effect. This is for 5 options. But on this one now, if we go to 95, my credit of $1 will turn into 6. On the other one at 95, I wouldn't have that luxury. Yeah, this is an interesting decision now. Do I do the 90s on both sides at the money, puts and calls? Again, the downside for me is I'm taking in almost $1 credit. So by March, if we're at 84, then I will get assigned TLT shares at 84. But if we're at 95, it's 5x. Yeah, I think this is more proper. Although it's taking more buying power. Yeah. Well, buying power is not my concern. Well, it should be my concern. It's taking away buying power. It's taking away almost double the buying power. So you guys put it in the chat. Which one do you guys would you do? Would you do 99, sell the 90 puts, buy the 90 calls, sell the 110 calls, or would you do sell the 85 calls? Because on this one, if it's below 90, I'm going to get assigned an 89, and there is a chance TLT goes to 85, but I don't think it goes below that. I think the other one is better because my downside is more limited. On this one, TLT could be 85, and I'll be down $4, $5. Okay, well, I'll think about it. So let's look at a few more charts. If there's anything in the chat, please put it up. There's a couple of little stocks that I was, let's see. There is one Wise Key I'm looking at. Yeah, that one 14 high came down to 3.5 or 4.5. Yeah, they did cybersecurity for quantum computers, actually. Yeah, I mean, limited risk trade, really. Buy it at 4.5. You're risking 4 or 375. I mean, granted, this thing was like 250 before it went from 250 to 14 in like 3 days. Pretty volatile, but I think it's basing here. So 2 stocks I'm looking at. I mean, you know, it's just short-term trade. SPCB, it's the same look. Yeah, SPCB and Wise Key. Those are the 2. And one last one is Zillow. Lower interest rates will help Zillow. Lower interest rates will help the stock, real estate market, obviously. MACD's turning up. CAM support at 68, which is 200 EMA. You know, earnings are bad, obviously, as you guys can see here, gap down. So, yeah, that's where we are. Yeah, I'm 98% cash, as I said. So, let's go look at the chat. Hopefully, some of you will come up. And we can have a quick chat. Nobody's there. Okay. Okay. All right. Let's see what's going on. Good morning. Good morning. Good morning. Big says looks like yeah. With Bitcoin, right? They do have tons of Bitcoin on their balance sheet, so it may. And also a space to be nameless, to be named nameless, or stay nameless. They're using their battery cooling systems. A rocket company. Rumors are that it's SpaceX. If it's SpaceX, that thing will go fly. So that's why I'm holding my lottery tickets. Yeah, it looks like it. You're right. Serge, let's pretend I want to go synthetic long on UPRO. Walk us through strike selection on the long. Since I have bad experience with long, I always hesitant where to select. Okay, we'll take a look at that. Okay, have a good lunch. Enjoy your lunch. Enjoy your day. Jason says, I called it last week, but too chicken to get in, kicking myself on route. Yeah, okay. Mr. Gambit says, what do you mean corporate profit taking? I don't know what that means. Nobody can buy the expensive cars, interest rates already. Yeah, well, that's what the government wants. Government wants lower interest rates, but it's not happening. It should happen naturally, but it's not happening naturally. So let's go take a look at what Ayn Rando is saying. You guys can see that, I'm sure. UPRO. Okay, let's take a look at UPRO. UPRO is like the triple Qs, but for S&P 500, 2x bullish ETF. If I want to do a synthetic, how do I select options? Okay, let's take a look. So if you're bullish, you mean? Okay. Well, I'll start with my time frame. Okay. So you got to start with the time frame. And you got to start with how bullish you are. So if you give me a little bit more parameters, but the way I look at it is I don't want to put money to play. I want money out of pocket. And you have to be comfortable buying UPRO. Where would you be comfortable buying UPRO if you get assigned? Obviously, you can roll. Obviously, you can do all these things. So if I had, so I'm going to look at it as just any other chart. I mean, obviously, it's S&P 500. So let's take a look at it. Charts. Okay, so that's UPRO. It's bouncing to the 200 EMA. If you bullish at this point, we're at 80. Low was 70. Are you willing to buy UPRO at 70? Get assigned. Okay, so the way I go through my selection is that, and where do I see it going? Do you see it going to all-time highs? I need a little bit more context. I don't see it going to all-time highs. If I was bullish at this level, which everybody's entitled to their opinion, I think we're going to rally to 83 to 86 and then roll over. So here from 80 to 83 to 86, I would go short term, risking 75. I would go trade. I would go, if this is going to happen, it's going to happen maximum by next Friday. So, and I'm willing to buy them at 75. I'll risk 75 on the downside. I will sell the 75 puts, which are $1.35. So I'll go there. And then if I was going to put a synthetic long, if your time horizon is longer, I'll take a look at that as well. And then I'll go 80 calls. I'll buy the 80 calls. And since my upside is at 86, 87, I'll sell the 85s or 86s against it. So I'll sell the 85s. So there you go. Nope, I did it wrong. Let's start over. So I will sell the 75 puts. I will buy the 80 calls. And I will sell the 85 calls for April 4th. Here are the 85s. Okay, so 70-cent debit. I'm putting up 70 cents out of pocket to make 5 in the next couple of weeks. That's what I'm seeing. Now, if you're really long-term and you're bullish, super bullish, you think we're going to go make all-time high, then I suggest you go to May, because by then we should be making all-time high. I think April is too soon, plus we have holidays in there for Easter and stuff, Good Friday or whatever. I will go to May. Same thing. This time, though, I will risk 70 because that was the low. I'll go 70, sell the 70 puts. Okay, and then I go to 70 puts, sell the 70 puts. I will go buy, and we're looking at all-time highs, so I will go buy the 80 calls. And what was the high again? High is 100. Okay. And then to give myself the most upside, I will go sell. Well, they don't have anything over 95 for May for some reason, so I'll go sell the 95s. I'll go sell the 95s. So selling the 70 puts gives me the protection on the downside. Buy the at the money 80 calls, and I'll end up doing this for 245 debit. And if you really want to get more aggressive, you can do the 75 puts, and your debit will be about $1. So we're buying the, let's test that one as well. This is the long term. I'm thinking by May we're going to make all-time highs. So let's go more aggressive. Let's sell the 75 puts. Buy the 80 calls, which is at the money. We're selling out of the money puts, buying the 80 calls, and selling the 100 calls, 95 calls. $1.20 debit. So we're putting $1.20 to get 15 out of it. If we do make all-time highs, this trade will return 125. It'll return 15. So about, I don't know, 12x. That's what I would do. Hopefully I answered your question. So two ways of looking at it. Real short-term bounce rollover. I do what with the April 4th options 2 weeks out. Go to May. By May, if you're thinking we're making all-time highs, then I think selling the 75 puts, buying the 80 calls, and selling the 95 calls is proper. That's what I would do. You're going to say I'm capping myself, or I'm looking at all-time highs, then don't sell the puts. Don't sell the 95s. Sell the 75 puts, buy the 80 calls. That's it. Period. And you're going to put out more money out of pocket, but not that much. You're going to put out a couple of bucks with an unlimited upside. The other thing you can do is you can do the make puts and calls. Let's see on the shorter end if they have hundreds. I would go shorter. Let's see. If they have April 17th hundreds. Let's see where that's going on UPRO. Yep, they have hundreds. Yeah, then go sell the... They're not worth anything. They're zero. Yeah, I would just stick with that. I would stick with May if you're looking at new all-time highs. That would be my answer. Okay. Yep, that would be my answer, sir. Okay. Hopefully I answered your question. I already have the Aprils. I've had it for 2 months. I had a debit spread. I bought the short side back because they were at a nickel. I have the April expiration 2.5s. If it's going to move, it's going to move. So I don't think it makes any difference. Plus, I don't know why you would buy calls on a $1.65 stock. Just buy the stock, bro. I mean, you know what I mean? Buy the stock. On a $2 stock, buying the calls, I don't think makes any sense. I mean, you can buy more probably. I get that. But you have, if you buy the stock at 165, whatever it is, you're looking at almost like a call option with no expiration date. Okay, well, then do a synthetic. Sell the puts, buy the calls. I don't know. If you want to look at it. I mean, you got to go long. April is too short. Probably May if they have May. Let's take a look at that for you. Let's see. Okay. Yeah, it's kind of building a bull flag. I mean, if it takes out the 50 MA, it came and found support at $1. MACD turned up. If Bitcoin moves up here, this thing has a chance. So give yourself some chance. I mean, we may get up to 260, 265. So here's that trade. What are we looking at? Yeah, they have Mays. I think May, June. They don't have June, so they have Mays. May should be enough time. Okay, so stock is 160. All right, so sell the 1.5 puts. You'll own it at 115, which is the low. Okay. Sell the 1.5 puts. Turn around and buy the... there you go. Sell the 1.5 puts. May. Turn around and buy the... I mean, this was like $6. So if it does fly, it will fly. I would buy like shit. I would buy like 3s. Getting paid to play. Don't cap your upside too much. I would buy the 3s with a 20-cent credit on top of that. Getting paid to play. You have a 20-cent credit. You're buying the 3s. Stock goes to 2.5. This thing will go from credit on the put side to massive credit on the call side. I would do something like that. I wouldn't just go buy calls. Because it could go sideways for the next, I don't know, month. but chart definitely looks interesting for a dollar stock that it is. Yeah, that's what I would do. You always gotta try to get paid to play. Like, all right. Okay, cool. Well, I'll see you guys. I'll see the members. Yeah, I don't know about any of that. I mean, you know, I'll see you guys on Wednesday, the members. And if you do join and become a member, support the channel. I appreciate it. Please put a thumbs up on your way out today. Hopefully, I'll see you guys on Friday. I have like a full week of other stuff that I'm trying to do. So Monday is trading with Sergio, Fridays Power Hour, and Wednesdays members only live. You know, much love. Stay safe. I'll see you guys on Friday.